Hello, everyone, and welcome to another edition of Mentor Moments. My name is Paul Martin. I'm the Director of Academic Content for the National Alliance for Insurance, Education, and Research. What a mouthful, right? And I am here today joined by my friend and colleague, Jim Gavin, who has been with the Independent Insurance Agents of Texas for many years and is super respected, and certainly by me. I want to welcome you, Jim.
Thank you, Paul. I'm happy to be here.
Well, today we want to talk a little bit about, again, this is for introductory people who've just gotten into business. Talk a little about insurance companies. You've worked for an insurance company, didn't you?
Yes.
More than one?
I worked for two different insurance companies. One was in a personal lines area and one was in the commercial lines area. And they were very, very different in what their appetites were, the way they approached what they did for a living, and the way they viewed themselves, quite frankly.
And insurance companies are like that, aren't they?
Yeah,
very different cultures. It depends on the part of the country they're even in.
And it depends on where they are and what their expertise is to some degree, what they think they're good at. You know, there are some companies that write a lot of personal auto insurance because they think they're good at it. There are other companies that write a lot of business insurance because they think they have the expertise to do that. Insurance companies are kind of like snowflakes. They're all a little different. They all like to do different things, and you'll watch them change over the course of your career.
That variety shows up in lots of different ways. Like you can have an insurance company that just specializes in one line of insurance, like they just write workers' compensation. You mentioned auto. There are companies that think they do it well. They may not be doing it very well. And there are others that excel.
It's easy to write insurance if you just want to be cheap and from an insurance company point of view. But if you want to make money, you've got to try and select above average risks. And to do that, you've got to understand what the exposures to loss are and make sure that you've kind of priced for them accordingly. That's the basis of how insurance works and how insurance companies make money. And it's odd, not many people realize this, but Progressive, who has a huge automobile book, a huge automobile writer, at one point in time was one of the top writers of fidelity business for banks.
I didn't know that.
In another part, yeah, and very few people did because it wasn't something that really impacted, you know, what most agents saw them for, basically. It was more of a specialized area. And so there are companies that have specialized areas where they think they have some expertise, and they were very good at that, by the way. And there are some companies that just won't go near it. You know, they don't understand it enough to try and price for it.
And that's a function of the people they have, isn't it?
Yes.
The actual staff they have, if they have experience in it and had success in it.
You know, this is something that I observed, this may sound really kind of odd, but when I was an underwriter for an insurance company, I understood how to underwrite moving and storage companies because I did that as a summer job. I drove a truck for Mayflower Van Lines. And so I understood the risk associated with that. I was the problem from our insurance company's point of view, so I really understood it. You know, but if you've never done that, it's hard to get your head around it and say, how do I do that? Underwriters have individual backgrounds that kind of lend them expertise or a knowledge of certain areas that kind of gives them a leg up when coming to insure things. Now, when I moved from one office to another or one company to another company, that expertise left. So you may have an underwriter that you're doing business with that you think, wow, this person really understands restaurants and they're really a great restaurant writer, until they leave, because maybe the next person doesn't have that background and isn't as comfortable writing restaurants. So it even goes beyond what the company's underwriting philosophy is. Part of it is a function of the underwriter's individual background.
You mentioned about being cheap. I mean, insurance companies can run themselves right out of business by being cheap.
Yes, it happens. We'll have several insurance companies, generally smaller companies, that will go out of business every year because they didn't price appropriately or they took on risks they shouldn't have taken on. They get into trouble financially, and then the regulators shut them down, basically.
Well, Florida's seen that.
Yeah.
With hurricanes come through in a year, and they'll take out 3 or 4 of them because they didn't have the financial wherewithal to cover what they promised.
Insurance is a pretty simple game from the company's point of view. Basically, we all pay each other's losses. So everybody throws their money into a pool. The insurance company takes a part of that for expenses and a small profit, and they distribute the rest in claims. Well, if they distribute more than they took in, they're going to have a problem. And to that end, they're always trying to attract better than average clients, meaning folks who are less inclined to have accidents or claims or,
And they're always looking for a new way to do that.
Yeah.
The credit scoring 20 years ago when that came in.
Credit scoring, which was proven by several studies to be effective, was not well liked by a lot of people because it wasn't understood. And I think that's going to get even worse with AI impacting insurance. I made this joke about 10 years ago, and now I'm beginning to wonder about it. At some point in time, your auto insurance may be based upon how many Facebook friends you have.
It could be. It could be. How popular you are.
That's exactly, or what you're posting, you know.
The insurance companies also, I've noticed in my career, they have very different cultures. For example, there's one large insurance company that they have a particular culture that allows them to succeed writing rich people's insurance. You know what I mean? Mm-hmm. Not everybody can pull that off because the expectations of the wealthy about their insurance company are very different than you or I. That they expect unbelievable service and deference on things. It's kind of like the Cadillac dealership in Dallas where some old lady brings her car in that's 5,000 miles out of warranty, and they say, we'll just go ahead and fix it under the warranty because she's bought 9 Cadillacs from them in her life. It's the same kind of expectation. They expect things to be covered. Sure.
And they also, and for some of those, and we'll talk about those types of clients, some of those carriers that write those particular individuals provide extra services for them too.
They do.
I remember that out in California, there were a couple of carriers who were actually offering wildfire prevention services. If a wildfire broke out, the insurance company was paying to have people go clear underbrush away from the dwellings and things, which was a good thing from the company's point of view if you think about it, but it looks like a tremendous service if you're the insured.
They just didn't want that $5 million house burned down.
That's exactly what they wanted, and they thought it was cheaper to try and protect it, basically. But from the customer's point of view, that looked like a tremendous service.
I heard one story of this insurance company in Dallas, this big one I was mentioning earlier, and they'd written insurance on these rich folks' house, and they went out to inspect it, and they were going, wow, this is really beautiful, this beautiful home, and brand new. And then they went out into the backyard. There's this beautifully landscaped swimming pool with the waterfall and all that kind of thing. And as this inspector looked down, there were some rocks that made flower beds and things, and one of the rocks was pretty good size, and it had a fossil of a baby dinosaur in it. And the inspector just goes, is that real? He goes, yeah, that's a real dinosaur. And they said, don't mind me asking, what do you pay for something like that? And it was like $85,000 for a rock. Mm-hmm. But the wealthy can do that. And so there's a culture that an insurance company needs to have to know how to deal with that. Where on the other hand, let me give you a contrast. There's some real tiny little insurance companies that operate in rural areas where if you have hail damage on their roof, they'll just drop off a pallet of shingles and say, there you go.
Right.
Because these are farmer people and ranch people, and their expectations are very different. Mm-hmm. And they don't want to be catered to necessarily that way.
They want to fix their own roof anyway because they want it done right.
They want it done right. So that variance has been amazing. There's also been a really interesting shift the last 10 years or so. Insurance companies selling online.
Yeah.
These online programs. Some of these insurance companies can be successful at that, but that isn't necessarily what is best for the consumer sometimes, is it?
No. I mean, if you think about it, look, no one likes to buy insurance. I don't like buying insurance. I'm no different than the average consumer, I think, And most people don't know what it's for or what it does. The advantage, Paul, that you and I have is we understand it a little bit, so we kind of understand what our needs are and what we want these policies to do. But the average consumer doesn't get that at all.
No, they don't.
The homeowner's policy is 20-something pages long. Really?
Yeah. Who's going to read all that?
It's particularly when I'm used to looking at things quickly online, I'm not going to sit down and read a 20-page legal document. It's a contract.
It is.
Most people don't even read their mortgages, let alone their insurance policies. And to that end, it's important that from an insurance company point of view, that the one thing to always make sure is that the company has enough money to pay claims, first of all. Otherwise, it really is a waste of money.
Talk about that, too. If you're talking to somebody who's going into an agency, okay? Talk about that issue. You can talk about ratings if you want to.
Yeah.
But what they're going to see as their career develops. What are they going to encounter?
What you will see is two things, and this is I think the most important thing if you're going to work in an agency. Insurance companies just don't give contracts to anyone. Life insurance companies do, but property and casualty companies do not. They want to protect themselves, basically. And so they say they like to establish relationships, and so they want agents and agencies that can commit certain amounts of volume to them over a period of time. And if they're not making any money, they'll pull out. They'll just stop.
If you have a final word about what's really important in an agency working with an insurance company, what are the most important things in your mind?
From the agency's point of view,
yeah.
Don't hold anything back. Be honest. Let the company make the choice. Don't try and, as important as the customer is, and as much as our focus is on the customer, understand that legally we are agents of the company, and we have obligations to them as well. And to that end, I think it's really important to develop relationships and be totally honest, and you'll never have a problem with an insurance company. Well, you may have a problem, but it won't be one you created.
Right. So, Jim, I want to thank you again for being on Mentor Moments with us.
Thanks for having me. I've enjoyed it.